Okay, good morning, everybody. It is Thursday, June 8th, 2023 here. Let's go ahead and do our pre-market for this morning. We've already done our review of what happened yesterday and for the rest of the week in our weekly webinar yesterday. Which, by the way, if you haven't sent me, I sent some private messages out to a few of you guys, to Thomas Masters, to Jerry, to Ted, and then I think everyone else. I have your emails for your YouTube, but I need the email associated with your YouTube account so I can share our private videos. So I'm going to be sharing the weekly webinars through YouTube's private. So I need the email associated with your YouTube account, and that's for Ted, Thomas Masters, and Jerry, I believe, are the three left that haven't responded to my private message. So go on to Discord. Here, I'll just share the screen here. Go on to Discord and go into your direct messages, and you should see on the top left, you'll see the direct messages button. You click that, and then down on the bottom, you should see a message from me there, asking you for the email tied to your YouTube account. So that way I can send you the weekly webinar videos, and you'll have access to them with your account. So Ted, Jerry, and Thomas Masters, send over that information, please. So let's go ahead, and I went ahead and uploaded it, so it is available on YouTube private right now. As long as your email that's tied to your YouTube account is sent to me, I will share it with you. So maybe after I do the broadcast here, I'll go ahead and jump in and get that out. So if you don't have a YouTube account, then just make one. So go to YouTube, create a YouTube account, and send me the information on the email. So yeah, just go do that, and that way you'll have access to all the private videos that I share. And I do like the YouTube type of, I like that they're hosting it and giving me the opportunity to keep it secret. I just like the YouTube format. I don't really like a lot of websites. They'll have a built-in web viewer or video viewer. I just like the way YouTube's set up. You can control the speed. I just like the layout. So, all right. So let's get into this morning. Just kind of an interesting observation, something to add to your notes here. In the overnight session, and maybe what I should do, I think actually the 30-minute will be a good time frame to look at to show you this. In the overnight session, first of all, the market came right to our next market scaffolding level, guys. And yeah, it broke by a couple ticks, but we've got this big rotation coming into the pre-market here this morning. So there's our market scaffolding working once again. Again, very down to nearly a tick. And then in the overnight session, this bounce off right around the market scaffolding got rejection right off the 38% retracement of the overnight leg. This leg down from the high of yesterday, down to this overnight low. Before we ever got there last night, if you were tracking this stuff, and I guess over in Australia for some of our Aussie friends, this might have been like the morning or midday for you, I don't know. It was definitely the overnight for me. I was fast asleep, but if you threw your fib from the high the day before down to the major low of the Globex session there, you would have had your 38 up at 42.78.75. You would have had your 50 and your 61 up here as well. Well, where did the market get rejected in the overnight session? Right off of it to the goddamn tick. Unbelievable. And then just a couple minutes ago, we came right back to it and got rejected once again. I think it went one tick through the 38% retracement of this leg from the high of yesterday. And this is just, again, like I said, everything we look at is just day in, day out, holding this levels within a tick or two or a point or two. And the next interesting thing that happened here from a fib perspective is that in the overnight session, this leg up, if you measure from the low of the overnight session up to the high it made, where did it come down and bounce from? Oh, what do you know? The 61.8 nearly to the tick. So it came up, and let me erase all of them. Came up right to the tick to the 38 retrace of, again, this leg down from yesterday's high. Market pulled back and bounced nearly to the tick off the 61.8 retracement, which was also the low of the day before there. And came back up and got rejected once again. Again, this was like within the last half hour, right off the 38 again. So just interesting stuff, guys, to be noting and putting in your notes for potential trades and setups. And I think that covers just some of the stuff I wanted to mention about what happened here in the overnight. Let's go ahead and jump up. Now, here's the thing. Remember, on Monday, we had a much longer pre-market session, so not including just the intro and me trying to explain some things for those that are new to the strategy and the system. But we had a whole bunch of levels that we had to establish and talk about. Well, this morning, because again, we haven't broken out of Monday's range, every single level that we have below us is basically the same. Now, there were some changes, like if we jump up and we really zoom out and come all the way out, yeah, we're going to have to redraw the larger fib, like the big, the daily might be. So we might have to redraw this larger fib that's all the way out here, or the fib from the major low from the rotation back in October of last year. From all the way down there, all the way up, we'd have to redraw it because we pushed to new highs on Monday. But those levels are so far away that they're basically irrelevant right now unless we have some type of hundreds of points of correction right now. So we're not going to worry about that. But inside of the current leg that we're in, which is from the major rotation back at the end of May, the last day of May, up to this new high, every single level that's below us has been the same all week because we haven't pushed to a new high, or we haven't gone ahead and pulled back deep enough to come down into some new areas to look at. So this is what we're dealing with on Thursday morning here, coming into the open. Up above us, this will probably be the easiest part, and we talked about it just a minute ago here, we've got the fib retrace of the current leg that we're currently in, which is this push from the high of yesterday down to this low that has now led to this rotation that pulled back to the 61 and has been having trouble here. So we've got the three legs. Let's talk the three fib retrace legs. We've got the 42, 88, 75. And technically it's really only two fib numbers and then just kind of this psychological 50% just to kind of be thorough with it. We've got 42, 88, 75, the 50% psych level at 42, 83, 75, and then we have the 38, which we're getting the rejections from 42, 78, 75. I think it's like exactly 5 points between each. And then we cannot ignore, again, we see it day in, day out. Just because we have this level here that's getting rejected, just because this swing low that we're coming up into is close and we're only 2 or 3 points away, doesn't mean they're not going to come right up into there and find some trouble as well. So just be aware, hey, sometimes it's tight. Sometimes we have levels that are close together. We saw it on Monday. I believe we came down and held the first level we expected, and then it came down and then peaked down and then held the second level. So just be aware that we've got that swing low there at 42.81 half. So right in between, essentially, the two first fib levels. Outside of that, this market scaffolding level is still sitting up there at 87, and that has been working really nicely. Despite all of the chop for the last 2 or 3 days, the market has literally been using this 42.87 as a very strong support and resistance. So don't kind of forget about that. And that might mean we actually have a little pocket between right around the 61 and that scaffolding level as a potential trouble spot. So what I'll do, we'll throw this on all the charts, we'll lock it in there, I will make it a gray box, and we'll pull it out to 3 p.m. today. So that little area right there. And to top it off, that is also, I just saw that actually right now, that market scaffolding level today also happens to be to the tick the 50% retracement of yesterday's price action. Okay, so that area right there with the 61 very close by might also be a pocket that makes sense for the market to pop right into and find some type of trouble. Okay, so we've got this established up above us here, and then we obviously have the high of the day before, which is going to be a major trouble spot for the bulls. So if the market, and let's look at this morning, if the market can break out, and I'll move it over here, can break out through all these trouble zones we just established in here, getting up through the high of yesterday does not mean we're out of the weeds for the bearish picture, because we've talked about this, and I believe the daily review post from yesterday, I just highlighted that the two patterns, the peak above and fail, right, getting up through a major resistance area and then just failing right back into the previous range, or vice versa on the other side, peaking below whatever low we're looking at and then bouncing right back up into that whatever may say previous daily range. So even if we get up there today, it's been a theme for the week, and for some weeks that's the major theme, are these fake outs. So don't just become a bull just because price is a couple of points above the high the day before. We need to see the market hold. We don't want to see that duck back below and then a little kiss and then we come back in. Okay, see that happen very, very often. So that's what we have above us here this morning. Remember, every other level I told you for the last 3 mornings are all the same. We've got that major retracement up above at 84. We've got our scaffolding levels that you all should have on your charts already. And there's really not much up here outside of that. On the other side of things here, if the market sells off this morning, we're looking at a pullback into the same 3 major retracements I've mentioned on Monday, Tuesday, and Wednesday. So I'm not even going to tell you the levels. And then we have that major swing high sitting right around 42 or 43 there. So we have a pocket right around 42.40 to 43. This magenta line is, and I have it on there not necessarily because it's like a perfect to the tick level that we use. It's more like a line in the sand for me, because that level right there, 42.35.75, happens to be 50% of last week. And so let's look at the weekly chart here. 50% of last week is there, 42.35.75. That's that magenta dash dotted line you see. So we've got our magenta dashed line for our power levels. This is like a dash dot dot just to differentiate between 50% of the previous day, 50% of the previous week. So I'm just, again, it's not something I'm really trading. It's there almost like a bias filter, because look at how strong last week's candle was. Remember, we talked about this coming into the beginning of this week. Huge wick to the downside, very bullish looking candle. We're breaking out of this major resistance around 4,200 that the market has rejected from for literally 7 months now, every time we come up there. So we finally broke out. We've got this really bullish looking weekly candle. So staying up above 50% of that candle is what we would ideally want to see if the bulls are going to be strong here to continue to break out. And unfortunately, all week, we are staying up above 50% of last week. But as you guys know from this week here, every time we try to break out, the bears jump in and they swat it back down into Monday's range and end of Friday's range. So it's been a real trouble spot right now to continue this breakout that we're having. And this very well might just be a bull flag, right? We might just be in the beginnings of, see, we're breaking out to the upside, and then we've got this big channel kind of coming down here, and eventually what we would expect from this type of pattern, and I think Tom Scalaro, we were talking about patterns. I don't necessarily trade heavily with patterns, but this is a very kind of typical formation here, right? We've finally got the breakout to the upside. In fact, we've kind of seen it in the past. If we go back here, if you look across here, this was kind of flagging out, right? Or maybe penanting out a little bit, kind of like a pennant. And then we got the breakout, right? And then here you kind of start to peter out again. And then we get the breakout. And now look at what's going on at the current moment. We're starting to peter out in a very similar fashion to what the market's been doing here for, again, I think of the last 6 or 7 months. Ever since we got the rotation back in October, I got to zoom way out, in October of last year over here, right? So these patterns, that's the idea with the market being strong and the fact that we did finally break out from that 4,200 area down over here. This might be a little flag pattern that eventually is going to lead to the next rally to a new pocket up here, right? So keep that in mind as well. It's just kind of a tangent I just went on there. But all these levels down below are basically all the same, so you should have them on the chart there. There is this other swing low or swing high that we're going to come down into at 42.03 half that also I believe should be on your charts since Monday. And then here's the thing, like I said, usually what we like to do is come up, look at the daily, see what we can kind of eke out of that candle and interpret, and then we come down to our 4-hour and our hourly to look for some type of confluence of a pattern or a signal. And we're still kind of stuck in the same situation here. We don't really have a nice huge alignment of signals outside of the fact that we keep getting an alignment of bearishness off the highs. So like I said, some mornings are going to be super easy. We're going to come in and maybe it'll be something like this, and we have just a very, very strong bullish pattern from the lows, and we're expecting a breakout or something to the upside, and we get something like that, or it just fails and does the opposite. This morning, we don't quite have a huge smattering of signals for one direction. So it is what it is. We've got to take it all week, basically. We've had to just take it level by level and shorter time frame signal to shorter time frame signal. And so we basically have kind of our lines in the sand this morning, right? We've got the major fibs up above us, our scaffolding, and our swing high. If the bulls can get through there, we've got to see what happens around the high of not only yesterday, but the high of the week, right? Because that's essentially what the high of the week is, right up there around 0575-ish. So we've got to see if the bulls do rip things all the way up there. Again, don't get suckered in because they could kind of pull it back. But at some point with this pattern, like I established just a couple minutes ago, with this kind of flagging out, the expectation from that type of pattern would be for this to eventually pop out to this next new range up here. So we'll just have to see. Like I said yesterday, when we popped out, if I look to yesterday here and move this over, when we popped out from the high of the day before, I was waiting. So I didn't just go ahead and buy. I told you I wanted to be a buyer up into at least the scaffolding. I was waiting, and then sure enough, it went right back down into the previous daily range again. So keep that in mind. And I don't really have much else. We have a lot of conflicting signals on either side. It would be a lot nicer. So if we came in this morning and the low of the overnight session right here was a beautiful 4-hour bullish signal, from there, we would have some agreement between the hourly and the 4-hour from the overnight low. That might give me a little bit more faith, I guess, in a push back up. But because we don't have a huge alignment down from the lows of the overnight session here, and even from the lows of yesterday, I guess what we can say, if we were to kind of add everything up like we do every morning here, there might be a little bit more weight on the bearish side, right? So coming into this morning, once again, it's hard to interpret, but because we don't have a very strong bullish case from the current low that we're making, you know, I would expect that we might come and revisit the overnight low, if not push lower again. Remember, anything's possible here. And because we do have such a kind of wonky sideways balanced market right now, you know, for all we know, we could be at the beginning of a major breakout back up. But I personally, typically what we're going to see is we're going to start to see at least the 4-hour and the hourly give a really clear signal for the bulls that will lead the breakout. Now, it's not 100%. It is really, really damn good, because nearly every time we have a really strong hourly 4-hour signal, and sometimes the daily on top of it, that is really where we get the major rotation. So we don't quite have it from the overnight low, but it, you know, just because we don't have it doesn't mean it's not going to happen and we're going to get the breakout. But all I can do, and this is something that I think I mentioned in the past to you guys, and that is, you need to have a consistent kind of way that you do things when you trade. If you don't have consistent way of looking at the market and you're constantly changing, you're not going to have a consistent profits in the end. You want to have a consistent process every single morning. So for me, it's my signals, it's what my candlesticks are saying, and then where the market is in terms of the levels that I look at. And I just do the same exact thing every morning. I add up what the bulls are saying from the lows, I add up what the bears are saying from the highs, and I get some picture. Sometimes it's balanced and there's really no kind of bias one way or the other. Sometimes it's clear as day and everything points for the bulls or the bears. This morning, like I said, maybe because we don't have the strongest bullish signal from the lows here, from the overnight lows, maybe that means we still have lower to go here before the major rotation. The other thing that I saw that I didn't mention up here on the daily chart is that at the moment, and this is what I'm always trying to do, is I'm always trying to anticipate what could be a potential divergence that's forming. If, and this is a big if, because today we have a lot of time for this candle to close and for the RVI signal to close at a specific level on the RVI. But what I want to point out is we just pushed to a lower low compared to, what is that, Tuesday? So we got a lower low compared to Tuesday. If, and this is a big if today's RVI closes above the RVI from Tuesday, which was 53.3. So if this ends up closing up at 54 or up at 55 or something, we're going to have a higher low on our indicator here, but a lower low on price. And so that might be coming into the end of the day. Well, this might be clearer. So by the end of the day, if that pattern shows up, and then maybe as the day progresses here, and the 4-hour has more time to build up some type of signal from these lows, we might actually start to get a daily, a 4-hour, and then maybe the hourly will be on board as well, and we'll have a whole slew, the daily, the 4-hour, and the hourly all showing a bullish signal. And maybe that's when we start to get this major breakout to a new area in the chart. Okay, these are all just kind of basic things I look at every morning, anticipating what the higher time frame signals might be telling me, you know, before there's any real confirmation of the signal, and then looking for the kind of more intermediary signals that have fully closed to rely on the higher time frames. So that's kind of finishes everything for this morning's pre-market. We've got a couple minutes until the open. So let's see here. I think that's basically it. Keep in mind this morning that if the market comes back up into this pocket, and it's basically all of this, man. It's just a whole lot. Basically 4270 up to about, I'd say, 4300 here. This 30-point box, it's been a total chop fest all week. So coming into this morning, just be careful up there. Be careful until we can break out to the upside, or until the market can get down through the lows of the overnight session here. Be very careful, okay? So the idea here is if we can get through, and I'm going to erase all this now, if we can get through the overnight low, if the bears are strong enough, could be some support down below in these areas. And if we can get up through this bearish signal we got from the overnight highs, then we're looking at these potential resistances here. And I really can't tell you one way or the other because I don't have such a strong alignment this morning. So take it level by level, signal by signal. So we've got a minute or two until the open. Be nimble out there. Don't get too married to one side or the other until things are really, really clear. And even when things start to get super clear, you always got to check yourself. You never know when they're going to throw a curveball and completely rotate things on you. That's the name of the game in this industry, is faking out all of us little retail traders to take our money and continue this gravy train for all the banks and everything. So be wary of any type of conviction. Just try to trade from level to level and follow those higher time frame signals. So have a great day, and I will see everybody tomorrow to end the week out for Friday. So see you then.